Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 5th of October. Starting off with Gfinity, where it looks as though we've broken that line of resistance from January at 4.6 pence, also above the rising 200-day line and actually rising 50-day moving average. So we've got a chance here with the run up to a golden cross, which could take the shares up to as high as 7 pence, at least initially, and by the end of next month, though, especially while we hold above that 200-day moving average area and, of course, that line at 4.6 pence. So let's see how we go with that. One of the better performers of the early part of this year was GS Technologies. Here we had that vertical move from January through to February in that golden part of the market, Q1 2021. Current situation is that the shares are trying to make some headway to the upside. They've broken that line of resistance from the middle of the month, around 1.1 pence. And the longer we stay above that, the greater the chance of a move up towards 1.6 pence, which is the main resistance line there from back in February. Perhaps we'll see that by the end of this month. Onto a stock which I always forget to look at and trying to make amends now, Immotion. Here we've got a beautiful rising trend channel from back in November. Shares are pushing up towards the top of that channel at 8.5 pence, and with a bit of luck, we could see that hit by the end of this month. In fact, probably looking for much more on a longer term view, perhaps by early next year, hitting a line of resistance towards the 11 or 12 pence area, maybe January time, something like that. But upside valid here, at least while we hold above the 7 pence area, which we seem to have consolidated well at and above in the recent past. Next stock has been alleged as a bounce play by a fellow roaster. Here we've got the shares of Parsley Box, right near the lows. The low earlier, the recent past has been down to 35 pence. Slight dead cat bounce at the moment, but the RSI remains stubbornly oversold, which is a plus, and it would be a plus if we hadn't had an RSI which is oversold since the shares were back at £1.40. So perhaps that particular indicator not working too well in this situation. The best I can probably say is that I'm looking for an end of day close up towards yesterday's resistance around the 42.5 pence level, although I suppose if you're in the stock looking for a bounce, that would be your exit point rather than your momentum trigger. So a bit of a difficult one there, probably only for the most aggressive of traders. On to Marechale Capital, where we hear that Luke Patisserie Valerie Johnson has got involved in the stock. I think it's taken 9%. Here we've got the shares gapping up off the recent lows and gapping through the 50 and 200-day moving averages, which is always a good signal, especially when they're both rising. That gives us the chance not only of a top of March trend channel target as high as 3.16 pence, but also perhaps a relatively easy retest of last month's peak at 3.6. It would be strange if after the stake that Mr. Johnson's taken, the shares don't go back to where they were before he took the stake. So this stage only really back below 2 pence on an extended basis, really upsetting the bullish argument. If you're a fan of the stock and looking for the best target at the moment, that would be up towards 4 pence if the trend channel is indeed up to that level or has that configuration at the moment. On to MySale, which gets occasional coverage here. Here, not the greatest charting situation, but we have followed on from the July falling wedge break after a few bear traps and other funny activities. Still want to see the shares above the 200-day moving average at 8.46 pence to give them a chance of heading up to 10 pence support at 7.5, but perhaps another stock which is not for everyone at the moment. A stock which is trying for the umpteenth time to deliver a sustained rally is Nanosynth, the old remote monitored systems. You can see how many times the bears have been selling those spikes since this time last year, and especially in the recent past, just sort of every halfpenny rally sold into quite aggressively. The plus point on this particular recovery is the way that we've had a rebound above the floor of the last gap in August. That was at 0.63 pence, and so sort of gap support, if one could call it that, tends to be a pretty good signal. All we're missing now really on is an end of day close back above the 50-day moving average at 0.84. If we can get that, then there's a chance of a 1.2 pence rally for the shares, even if that is sold into after that. Moving along to Oxford Biodynamics, which has been Bitterly disappointing, I think you could say, after the spike that the shares had up to £1.20 back in the first quarter of the year. Here we've got a situation, though, that the shares have broken that May resistance line at 47 pence. Above that, a retest of the 60 pence area from July could be possible. If you are cautious, you wait for proper end-of-day close above the 50-day moving average at 49.5, which we should get today. The other final plus point, though, is the way that we've gapped up and held the top of that gap at 45 pence. So that does suggest that there is momentum here, decent momentum here, and that perhaps the bears have been caught on the hop. On to Pelatro, which we'll try and get it to come through right now. Here we can see that we've had already that April resistance line break and the 50-day moving average break at 38 pence, and above that looking for the shares to fill the gap up towards the 52 pence area, which was the top of the gap from back in June. Time frame on that perhaps by the end of next month. Requested stock coming up now, RUA Life Life Sciences. Here we've broken that line of resistance from February. Bounced around the 200-day moving average at £1.42 and above the 200-day line, looking for a relatively easy retest of the best levels of last year and this year towards £1.80. At the moment, in terms of the upside, probably looking at a line up towards the £2 level as a best case scenario over the next couple of months, if the shares can break through that £1.60 area, which looks as though they will, given that we've had that unfilled gap to the upside above the 50-day moving average. Next up, or the final stock, in fact, is United Oil and Gas, which managed to bounce off ultra oversold areas just below 2.5 pence. Actually peaked today at 3.4, which is a decent result. But we want to see the shares remain above that broken line of resistance from July, around 2.75 pence. Above that, then there's still a chance of retesting 3.5 or so. So far, though, all we've done is fill the gap up to 3.3 and then fallen back again. So 3.3 on an end-of-day close basis would be a decent technical gap close signal and maybe worth waiting for on United. Otherwise, it's above 2.75, still holding to that recovery argument. That's it for me today. More updates tomorrow.